In today's discussion, we're diving deep into the current status of SoFi stock and what investors should be watching for as we approach the end of the first quarter. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. The past couple of weeks have been quite challenging for the stock market, with various macroeconomic factors like tariffs, inflation, and CPI playing significant roles. While I don't focus too much on these aspects, I'll highlight the key headlines. That being said, I'm optimistic about the month ahead as we progress further into March. With Q1 nearing its conclusion, we are now 2/3 of the way through, and in less than a month, we'll transition into a fresh quarter with new opportunities. SoFi has already outlined its strategy for the year, aiming to ramp up growth while delaying profitability in the first half of the year. Their goal is to generate substantial profits in the latter half of the year and potentially reach an EPS milestone of 80 cents by 2026. Realistically, we're not expecting huge profitability spikes in Q1 and Q2 as the company is currently prioritizing expansion. CEO Anthony Noto has clearly laid out their approach to boosting the stock's performance, shifting focus away from traditional banking towards increasing fee-based revenue. This strategic pivot is evident in their financial reports, where fee-based revenue is steadily becoming a dominant segment of their business model. SoFi is closely analyzing the success of other companies in this space, such as Upstart with its loan platform, Robinhood with its subscription services, and Hims with its growing customer base. Over the past year or so, SoFi has been working diligently to develop and launch two major products aimed at increasing their revenue streams. One of these is their loan platform, which has been active for 2 quarters, while their subscription service is still too new to gauge its full impact. The potential of these offerings remains unknown, as we have yet to see how many members will adopt the subscription model. However, one thing is clear: these additions will significantly boost fee-based revenue and ultimately increase SoFi's stock valuation. Looking at the broader market trends, I believe that March could bring some positive momentum. While the market may not shift immediately in the first week, by the second or third week, we could see a turnaround. Over the past 3 months, small-cap stocks have experienced a significant pullback, with IWM correcting about 13%. A 20% decline is generally considered bear market territory, so we've seen a strong correction in this segment. Despite this, SoFi has held up relatively well, maintaining strong support at the $13 level. Even with negative news surrounding tariffs and CPI, the stock has been bouncing between $13 and $17 for the past quarter. When market conditions stabilize and fee-based revenue continues to strengthen, I expect SoFi stock to break out. I anticipate SoFi's revenue growth to exceed 30% this year, with potential for even greater gains beyond 35%, which would increase my confidence in holding the stock into 2026. As we approach Q1 earnings, I want to help build your confidence by analyzing key metrics and trends. According to CNN's Fear and Greed Index, market sentiment has shifted dramatically. A month ago, the index stood at 47, reflecting a neutral stance. A year ago, we were in extreme greed territory at 76. However, as of now, we are sitting at just 20, which indicates extreme fear. Historically, such levels often present strong buying opportunities, especially if we receive favorable macroeconomic news. A slight uptick from 18 to 20 was recently observed, suggesting a potential shift in market dynamics. With a positive inflation report, we could see further recovery in March. If you're considering whether SoFi or other small-cap stocks are good buys at the moment, take a look at the broader market correction. The IWM index has dropped 13% over the last 90 days, with stocks like Robinhood, Palantir, and others seeing declines ranging from 20% to 40%. Even large players like PayPal and Block have faced similar pullbacks. Chart analysis shows that SoFi hit a 3-year high of 18.42 cents before retreating, with recent lows at 13.42. Looking at the past 3 months, the $13 level has been tested multiple times, proving to be a strong support zone. Over the past week, the stock has been trading between $13.50 and $14.65, and breaking through $14.65 could set the stage for further gains toward $15.37. A return to the mid-$15 range is the immediate target. Another interesting factor to consider is the options market. 2 weeks ago, we saw major call and put option expirations reaching over 100,000 contracts. However, the upcoming 2 weeks show significantly lower numbers, with call options at just 66,000 and 30,000 for the following week. This is the lowest we've seen in a long time, suggesting a period of relative stability. By mid-March, the options market could become more volatile again, but in the short term, things look favorable for a steady climb. Looking at SoFi's internal performance, Anthony Noto's recent statements highlight their commitment to fee-based revenue growth. In Q4 earnings, fee-based revenue reached a record $970 million for the year, marking a 74% year-over-year increase. This revenue stream is key to SoFi's valuation expansion, aligning them with companies like Upstart, Robinhood, and Hims. In Q4 alone, fee-based revenue totaled $289 million, up 63% year-over-year, while financial services revenue soared 84%. The technology platform faced challenges in 2024, but is now securing new deals that could drive significant growth in late 2025 and early 2026. The real game changer here is SoFi Plus, which is expected to unlock substantial revenue potential. We don't yet have clear data on how many members are utilizing direct deposit or other premium features, but this information should become available soon. As SoFi Plus gains traction, its impact on overall revenue could be massive. For instance, adding 1 million members could generate $100 million in additional revenue. And with 14 million members expected by year-end, the growth potential is enormous. One reason for SoFi's recent stock pullback was their slight earnings miss. The company fell short of analysts' EPS projections for 2025 by a mere 0.0122 cents. This minor miss led to a temporary dip in stock price, but had they set lower guidance, the stock would likely be trading higher today. However, SoFi has a history of exceeding and raising guidance, as seen last year when the stock surged from $7 to $18 in just 90 days. If they follow a similar pattern this year, we could see another impressive rally. For 2025, SoFi projected EPS in the range of 25 to 27 cents, with Q1 guidance starting at 3 cents. Given their track record, they may outperform expectations, pushing EPS to 4 cents or higher. As they prioritize revenue expansion over immediate profitability, they are strategically positioning themselves for sustained long-term growth. The bottom line is that SoFi stock presents a compelling opportunity. With a solid strategy focused on fee-based revenue, an expanding subscription service, and a resilient stock performance amid broader market corrections, the company is well-positioned for future gains. If growth accelerates as expected, breaking past the $20 range and even revisiting all-time highs above $28 is a realistic scenario. The next few quarters will be crucial in determining the trajectory of SoFi stock, and I'll be keeping a close eye on these developments. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.